Good morning and welcome back to Almus Market Mornings, your daily dose of global financial updates. The focus is on Bank of Japan and markets will be keenly paying heed to this decision. Now, Japan is a developed market economy which has not increased interest rates directly. Instead, they have tweaked their yield curve control policy to raise yields of their 10-year benchmark and protect a bit of their currency. Now, past 2 days have seen yen strengthen and the Japanese 10-year yield hit almost 1%, currently at 0.95%. Good morning, JK. Do you think the BOJ will further ease the yield curve control a band? And if so, what kind of impacts can we expect in the markets?
Good morning, Swaraj. I think definitely the focus is on BOJ today. Of course, to be followed by two more central banks meeting tomorrow, Fed, and day after tomorrow, the Bank of England as well. Now, opinion on what BOJ could do is very much divided. Most people are skeptical that they hurry into doing something and may wait till December. But there was a Nikkei report which said that they could tweak the policy. Also, looking at the way Japanese stock markets have not reacted to the big rally in the Dow Jones overnight, also gives a sense that some may be cautious about a move by the Bank of Japan. And even if they move, they are likely to just hike the ceiling of the 10-year JGB yield, and no change in the policy rate would be expected. And if they do even change the negative interest rate policy, that would be big shock to the market. And now back to yesterday's, on a day of sparse data from US, European headlines grabbed attention. Germany economy shrank 0.1% over the third quarter of 2023, but it was positive compared to expectation of 0.3% contraction. But definitely the continued degrowth is worrying. On an annual basis, it was 0.3% up from a previous reading of minus 0.2%, and once again that was considered as positive. The prevailing view that the economy is struggling to perform remains intact, of course. Now, German inflation also slowed markedly, more than expected in October, as the Europe's largest economy struggles to grow. At 3%, the price pressures are the weakest since June 2021, well before they started hiking rates. And the result underpins European Central Bank's argument that a record bout of interest rate increases is starting to show its effect, and the pipeline pressures are, pipeline deflationary pressures are in the works. In fact, Lagarde had explained that further easing in inflation was one reason why they had paused rates last week, and they may now as well go into a longer pause, considering the fall in inflation as well as the GDP contraction seen in Germany. We will have numbers for Eurozone in terms of GDP as well as inflation today. Growth is expected to flatten down, and inflation is expected to ease in Eurozone as well. Now, of course, the lion's share of these declines can be attributed to energy costs, although contributions from core categories slightly eased as well. Now, we did have, as I said, the risk sentiment got a good boost yesterday, even as we started the day with Australian retail sales surpassing expectation in September, and that's likely to boost the central bank's confidence in hiking rate once again. Just remember that last week's inflation number in Australia came well above expectations. So Australia may be one of the developed nations that can see a policy rate hike, while most other nations are on a pause. Now, whatever the fear is that most countries' consumption is holding up despite the hefty rate hikes, and that could mean that inflation can rear its ugly head in due course. That is something we want to wait and see. That is the reason why even the central banks are going to keep rates higher for longer as well. We'll also have the Chinese PMI, both manufacturing and services expectation, which are both expected to hold above 50. We have the BOJ rate decision at 8:30 a.m. Our time. The Eurozone data, of course, will also follow later. Then we'll get many indicators, this week with U.S. employment situation being in the limelight in the form of the employment cost index that is expected today. ADP rather, private jobs report tomorrow, along with the JOLTS data, Challenger on Thursday, along with the weekly claims, and ending with the all-important NFP report. Then apart from these, we'll have the PMI surveys of various countries as well. Now, yesterday risk rallied in global markets, Dow posting a strong 1.58% gain. S&P and Nasdaq also gave nearly 1.2% gain. Fall of 10% in both these indices, I mean the S&P and Nasdaq, had given rise to thoughts that they will go into a corrective phase, but then a strong buyback after looking a bit oversold in the short term has driven away those fears. And the Microsoft, Amazon, and Apple giving the good results also gave an added boost for the market, which is looking for an excuse to buy back whatever they have sold in the past few weeks. Now, markets had several things. Several reasons also to buy back. The blockbuster GDP number, consumption remaining strong despite high rates and inflation holding lower levels, and of course confirmed by Europe also yesterday. On the war front, things have not eased but have not escalated too much as well. And added boost was the fall in oil prices by nearly 10% from their war-induced rally. So these are good reasons for stock market to do well. US yields have been steady to slightly higher, not reacting much to the US government trimming its borrowing for the current quarter from $852 billion to $776 billion. But the market may be just waiting for the quarterly refunding announcement that is due tomorrow. On the currencies, Euro did stage a minor rally despite a weaker GDP and falling inflation. But I would put it down to the fact that market has been talking about flat growth in Euro area and negative growth in Germany for quite some time. Therefore, the data have been taken in a stride. Japanese climbed to a 2-week peak, as you said, Swaraj, against the dollar on Monday after a report said Japan is considering tweaking its yield control. But as I said, we would only believe when it really happens. And with risk sentiment boosted and retail sales surprising to the upside and rate hike prospects increasing, Australian dollar turned out to be the best performer of the day, although the other commodity currency, Canadian dollar, underperformed due to oil prices coming lower. On the rupee, there were concerns ahead of market open yesterday that rupee could be falling through all-time lows as it had closed at 83.41 in the India market, but those fears were allayed by prompt appearance of central bank sales ahead of the onshore market open, and rupee slipped into the narrow 4 paisa range, and that was not a surprise. On the flip side, it did not react to the strength seen in other Asian currencies as well, while the demand sustained even at all-time lows of the rupee. On the positive side for the rupee, domestic stocks rallied strongly, erasing all of its earlier losses, though FII flows continue to be negative. Now, unless we have a big positive surprise today, FII flow for this month of October is going to be more than 2 billion, and that 2 billion negative, following a 1.6 billion negative last month. So we are seeing steady outflow from FIS. We'll just have to wait and see what the new month holds, even as the stock markets have given a good correction and the inflation is falling everywhere. Thank you.
Thank you, JK. And as you said, all eyes on BOJ as of now. And Bank of Japan would be slow to take any drastic action. Possibly one action they could take is raise the ceiling of the 10-year bond yields. So we'll keep an eye out for that. So the decision is at 8:30 a.m. India time. When it comes to European data, German inflation slowed in the month of October. Price pressures are the weakest since June 2021, while the economy has been bad, but basically not as bad as markets have been expecting, which is possibly why we saw some rally in the euro. We have the Eurozone inflation and growth data upcoming, and one broad thing which we are catching on is that the consumption is holding up despite whatever is going on in the world, as seen by the Australian retail sales data, and it has raised prospects of the Australian Central Bank raising rates, and in effect led to some strength in the currency. So a lot of data and central bank decisions to keep an eye out for this week. Keep following us for the latest updates. And lastly, when it comes to rupee, we have been in a range. Earlier, we saw a move higher in the NDF markets, but then due to central bank curbing the excessive depreciation, we were once again in a range. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.